Good evening, ladies and gentlemen. This is Clueless Day Trading Frank. It's approximately 9:45 p.m. I do apologize for the delay. I'm in the process of upgrading one of my trading systems for much more faster speed, much more than I have, far more powerful, so that I can construct the charts in real time like I always do and present it faster to help you guys. That was the reason for the delay. Plus, it's a summer evening and people are on the West Coast. To them, they don't have to rush back home to listen to my weekend webinar. It's 9:47 Eastern Time, and the West Coast it's 6:47. So it's perfect for people out in the Midwest and as well as on the West Coast. Full disclosure: this is purely for financial education, not for any solicitation or advice. And we shall begin. So tonight, I'm going to try to keep the banter to a minimal. One of our new members, no names mentioned, and a great ACS coaching student, today gave me a very simple piece of advice. And I said, what? He said, Frank, you explain too much. I said, what? I explain too much? He goes, yeah, you explain too much. Just tell your members all this precision stuff that we're delivering repeatedly, good, bad, and ugly markets, big money's being made. Some members are making monies that they have not even imagined they could make. And some are making decent money, and some are basically being idiotic and stupid. And despite my absolutely monster forecasts and alerts on multiple tactical trades, they're sitting around twiddling their thumbs. Those people can only be helped by mental calibration and intervention, which I am not going to do. They have to do it themselves on a behavioral basis and do what they need to do. So this new member, I should say, told me, explain to me in very simple terms, explain things less and just show what is going on, what will happen, and let them do what they need to do. And I thought about it about an hour later, and I said, you know what? That's right. I'm probably going to fail in that because I have a tendency of trying to be a little bit too helpful to people through my service, a little bit too detailed in my explanations, which takes a lot of my time and energy. And for the puny amount of money that I'm charging people a month compared to other services, which are producing garbage and charging $100, $200, $300 a month for the level of performance that I provide, and they are providing maybe 1/10 of that with a lot more fluff. And I thought to myself, and I said, you know what? I agree with that individual. So I'm going to attempt to do that and get straight to the point. We'll have a Q&A session. Feel free to ask any questions. I'll answer it the way it is. And then after that, you pick up the ball and run with it, because that's what it's all about. So saying all that, a couple of broader points on the overall market. And one of the biggest points is we are in the cusp of a massive bull run, which I predicted and forecasted weeks ago, if not months ago. Along the way of this bull run, and this is the 2018 year-to-date chart. This is what this was the last day of December. Markets fell, I believe, about 200 points. It was supposed to be the end of the world. 2018 was supposed to be Armageddon. And this first green candle was 2018, January 4th, I believe. The first trading day of the month. Can't remember, January 3rd or 4th. And the market went ballistic. And since then, the market went ballistic, people went ballistic. Mom and pop thought that was it. You know, the market's just going to start off and just keep on running. Mom and pop's always chasing prices like many of you do. Well, most retail traders do. Always looking at price, always looking at volume, never looking at internals, never looking at patterns, never looking at all the different strategic stuff that I keep on showing, never quite understanding the sentiment in the market. And they all rolled in. And then this happened. And I mentioned this on almost every webinar. You know why? Because it's very important. This I called wave 5. In Elliott wave theory, wave 5 is basically the final wave before a significant drop. Well, that drop came. We dropped 1,400 plus 2,000 points almost. Don't have the exact numbers in my head on the Dow. And even through this, we made money. Not every day, but net on a weekly basis, we were net positive. The results are there. Okay, we were net positive because we caught bits and pieces of these massive flash crashes. We certainly call the reversal bounces because I am net bullish, still net bullish on a net basis in between, tactical shorts and tactical longs. Obviously, I'm biased more tactical long and dead right on it. Unlike many of you who are basically on a cognitive basis, in other words, in simple English, in your brain, you guys are basically bearish. And that bearishness comes in the form of not taking trades, selling too early, not doing swing trades, not buying tactical lows, not buying these bottom cups, and sometimes being forced to chase the upper end of the move, and then you get these consolidation channels. We're going to go through this chart. This one chart could basically explain the whole webinar. And consolidation channels, panic, sell pretty much around these levels, and then miss out on the breakouts. Bull flags look like this, ladies and gentlemen. Okay? This is exactly the story of the market. Till the primary trend changes, the market will keep on going higher. Period. I don't care what you think, what grandma thinks, what your dog thinks, or, whatever it is. Doesn't matter. We're in a bull market. Bull markets don't end in one day. I haven't been in the market 20, 30 years. Yeah, 20 years probably, right? Yeah. I've been in the market since 1996, 1997 when I started working at Wall Street. Before that, I was in Putnam Investments in Boston as a fund analyst. Understood a lot about the funds, understood not much about the markets, to be honest with you. But I was, one thing I love is always learning. Always learning. Maybe that's what makes me smart about the markets. You guys are a lot smarter than me in many different aspects of life. I'm sure. I've spoken to many of you. I have deep respect for everyone. But when it comes to markets, I'll beat you guys all in understanding the behavioral and the technical and the fundamental aspects of the market. So this is the bull market. In a bear market, it looks like this. Things fall, they rise. That's called a dead cat bounce, right? Dead cat bounce. The hopium comes in like, oh my God, it's really going to keep going higher, really going to keep going higher. And guess what? Just the opposite of this. Instead of shooting higher, a bear flag breaks down. It happens in individual stocks. It's happened a few times. So this is a shortable channel. This is a buyable channel, what we call a consolidation channel. Retail investors, just the way retail shorts who are short, they tend to short around these levels. Not around here. They get caught on that updraft that comes very suddenly as the primary shorts who are up here cover. So they shorted something, let's say at 8. Let's just pick the number 8. We like the number 8. And they cover at 2. The market rallies to about 3. The stupid shorts get in here at the lows, shorting the market around 2. Against them, they are losing now 50% of the money because the $2 short goes to 3. So just the opposite of longs. I hope I don't have to explain kindergarten basics. They lose money. They panic, they sell. They cover, and then comes the next blast, and the 2 goes to 1. And that's a 50% gain for the shorts. So in a bull market, same story. This is at 2. We are generally buyers. Sometimes a lot of the times actually, I am attempting to buy initial positions on my very precise indicators that I put out there in the worst possible moment, emotionally, not technically. Yeah, technically too, in the worst possible moment, because I'm starting to see the formations of those deep oversold conditions. And this is the simplest one you guys can trade off, which is the stochastics. The simplest one. You don't need a degree in anything to read this. It gets this oversold, you frigging buy. Yes, will it slip and slide sometimes? Absolutely. But you're going to get a big time power reflex bounce because the smart shorts who shorted at 8 are covering at 2. So you are going to get a reflex bounce. Whether it's going to be a continuation rally, we don't know. And we don't care because that reflex bounce as the shorts cover that goes from 2 to 3 for you, for as options traders, you're making 50 to 100% on your money. And it happens fast, within hours, if not 24 hours. And you've seen this happen repeatedly. I have repeatedly alerted people. And many of you, I'm proud to say, have taken advantage of it. And many of you, I'm sad to say, have not taken advantage of it. It's not my problem. So bottom line is that your cognitive bias and the way you look at trading is also reflective of how you look at life. Some people are born pessimists. And they say, I'm not a pessimist. What does a pessimist say? Does anyone know? You guys are all grown people. What is the what does a pessimist say when you say, hey, you're a pessimist? You're all looking at things, like everything's going to be bad. What is a pessimist defense in response to that statement? Please, somebody respond and tell me. Because they're smart people, family people, come on. Give me a response right now.
I'm an optimist.
Never. A pessimist never says I'm an optimist. Wrong. Next one. Thank you. YBI comes to the thing. A pessimist says, I'm a realist. A realist. Thank you, Y. Hats off to you, lady. Okay? Says, I'm a realist. I don't believe in dreams and all this opium stuff. I look at things that are in front of me. Trump's getting impeached. The United States of America is in the gutter. We are no longer the greatest nation in the world. Blah, 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 blah. Markets are overvalued. Look at Netflix. Can it ever go up? Apple. Oh my God. They can't even sell phones. Everyone's buying the Samsungs and the Samsungs, Which, by the way, are beautiful phones. I actually finally touched one the other day at Best Buy. And I was like, wow, look at this thing. This beautiful screen and stuff. But it's still crap compared to Apple because we got the app universe behind us. I'm just half kidding. Beautiful phones, Samsung actually supplies the freaking screens for half of Apple's, screen phones. Anyway, so a realist says they say they're always thinking of everything that can go wrong. Maybe that's how they lead their lives. Are there successful pessimists? Absolutely, in their own business, not in the market, guys. That's why I directed you all to read the hedge fund thing. Because hedge funds overall, and these are the so-called smartest guys and gals in the world. Harvard, Stanford, MIT. Okay? Carnegie Mellon. They're picking the best of the brightest. And they are all losing money. In a market that, as we speak, is making a new all-time high. A pessimist, and it's just like saying, so what? So what? I don't know. I'm just a normal guy who wants to make some serious money, take care of my family, give away a lot to my charities, and just say thank God for everything. A pessimist, I don't know, man. Thank you for the answer. Exactly. So the bottom line is your cognitive bias is extremely important when you're trading. You go into a trade thinking how much you're not going to lose. I mean, how much you can, how much you're going to, what's your downside? Like, oh my God, am I going to lose this? chances are you're going to do some stupid things and lose. Because the volatility candles that come through, even on these massive upturns, you're going to sell at the wrong time. And many of you do. Or you're going to sell too early, which many of you do. I do sell too early too at times. But I scale my profits and I do sell my final bit towards the tradable highs. Sometimes I wish I held the whole position, but I'm disciplined. Do I make an excuse about it? Nope. Do I get really pissed at myself for not holding my core position to the levels that I show, which inevitably they go to? They really do. Yeah, I get pissed about it. So let me get back to technicals here. So this is a bull market. So you could go to the, so what happens is this goes to 7. This is the 8 level. Just the opposite of that. Okay, here was the 8 was the top. The short shorted, covered at 2. The idiotic shorts came in around 2 around here. They're losing money, and then boom, bull market basically. A bear flag comes down. So in the bull market, the opposite. The retail trader refuses to buy at these levels. They're not looking at technicals. They're just dead scared. The so-called pessimist. So the pessimist finally decides that, you know what? Oh, God, I gotta put in this trade. He gets into the trade, he or she, at $7. It runs up to 8. They're like, oh boy, making some money. This is good. Guess what happens? Us who bought at 2, 3, 4, we're just like, okay, by this time, the stochastics are overbought. Simple. My slow stochastic, which is the really advanced chart on quad, is flashing signals of overbought signals. What do I write on my Twitter feed? Sell, full, or partial, large, profits on multiple tactical trades. And I mean multiple. Or maybe sometimes all on those tactical trades. So, the tactical trader, who is the smart trader, does that. You get a consolidation. That 8 drops to 6, to 5. The emotional retail trader gets in at 7. And sometimes at 8. Because he or she is chasing price. And price is exciting. Ooh, it's going higher. Okay. That's called mental calibration. You've got to look at the market differently. And I don't say that lightly. I'm doing this webinar so that everyone is truly somewhat satisfied with making some serious money. Huge money has been made recently, as the last 3 days, and as recently as the last couple of weeks. Throughout everything. Throughout losses. And my only goal is really simple. Just so you guys all understand, all right? I'm a very nice guy. Trust me. But when it comes to trading, I am not a nice guy. I do not entertain frailty. I do not entertain fear. Even though I think fear, which I've been through many times, even this week, right? Wednesday we had a flash crash. Did we all forget? I take that as a positive reinforcement. You hear that in my voice. I'm not reading off a freaking script. And I move with it. I will never let the market beat me. That's why I am here. Will it beat me on certain days? Oh boy, it's going to beat me on certain days. Or a couple of hours. But net, I will beat the markets. That's what my charts do. They constantly beat the markets. Now, if you guys expect every 15 minutes, which I know you guys don't, but some of you do, for something to work out, or every 4 hours something to work out, or every day something to work out while we're setting out the setups on the buys, well, it ain't gonna happen like that. Because we are not 100% a day trading service. I look a lot of videos from great services out there with a lot more members than us. Their performance, pathetic. They're scalping. That's fine. You want to be a scalper? I scalp too at times, right? Intraday trades. But they're scalping for pennies. Literally, figuratively speaking. We're not a scalping day trading service, guys. We are a combination of swing trading, tactical long-term trading, and tactical day trades that I present out there. So just keep that in mind so that you know what I am delivering and what your expectations are. If you want to be an active day trader, you better be glued to multiple screens and trade off my charts when I'm telling people to buy off some flash lows and they're up 14, 15, 20 bucks on the bookings of the world and the Amazons of the world within an hour. That's fine. So this is what bull markets do. So the retail trader gets caught, he or she panics, sells at 6 or 5, and then comes the breakout. So let me remove all this stuff. And I'm not going to even bother asking, like, do you understand this? Because somebody tells me they don't understand this. I would simply say, please, just close your trading account out and do something else. So saying all that, let's look to see, please, somebody mute their mic, please. I'm getting feedback. So this is 2018. Look what's going on here. This is a broader picture. Please, somebody mute their mic because we're getting feedback. So bottom line is, this is absolutely a masterpiece chart. Somebody please mute their mic. We're getting feedback. I am not going to continue till somebody mutes their mic. We're getting feedback. Thank you. So saying all that, when we were going through this massive, this is when vol was like nuts. This, I want to remind everyone, that occurred between the months of February after mom and pop all dove in like idiots. It's not their fault. It's not their fault because they're not mom and pops, really not all mom and pops. They all should be members of Clueless Trading. So they don't have to suffer this idiotic pain, right? But that's not the case. We'll get there. Well, I actually don't want too many mom and pops in here, even though I'm a pop. So bottom line is that this period, just so you all understand, is an aberration. It doesn't happen more than once a year. And that's even a stretch. It normally happens once every 2 years, just so you guys know that. Okay? Because this is massive dislocation. Massive dislocation. The vol and the skew, vol meaning volatility, and the skew and all that stuff is intense. This is when the algos go nuts. They have no idea what the heck they're doing. Hedge fund managers they have no frigging clue, but they are loving it because you're getting these 1,200 point drops. They're hating it when you're getting back 1,000 of that because a lot of the hedge funds are net short. But this is, in other words, an aberration. What the norm is with the markets is generally speaking, and this is just from 2018. I'll show you the longer one, which is going back to 2009. Is basically an uptrend channel like this with large corrective pullbacks. Okay, that's the norm. So keep that in mind. It doesn't mean like an idiot on other forums. Many of you know what those forums are. I'm not going to name it. You don't BTFD all the time. You don't buy the frigging dip every single time. No. That's not how we do it here. Okay? We do it mechanically. If the technicals are projecting that there is going to be a bounce, if it's within the channels, absolutely buy it, hands down. And so that's really what's been happening. So this pitchfork here, okay, is a very clear indication of that. We are in a broad macro channel. The macro channel is at 2,800, where your bottom line support is. Anybody can see that. That's why I drew the line. You break 2,800, you start to retest the 27. Oops, sorry. You start to retest the downtrend line. Remember, red lines pointing down, no sarcasm included, is a downtrend line. Okay? A green line pointing up, heading from lower to higher is an uptrend line. A straight line is resistance. A red line is support. Not being sarcastic. I'm just basically saying it, just so you guys keep that in your head. Okay? This is major support. 2600, which we touched and kissed back on May 3rd, 2018. Do I think we can get there? Yeah, I can think we can get there. That's a multi-thousand point drop on the Dow. Is it possible? Absolutely. The time frame, if that type of stuff happens for different reasons, is going to be mid-September to mid-October. Okay? Now, as a committed bear would say, i.e. a pessimist, or they say, oh, no, I'm a realist. Okay? A realist pessimist would say, no, that's definitely happening, like right now. No. Unless something really nutty goes wrong. Even with, let's say, for example, impeachment charges and there are criminal charges against Donald Trump. It can happen, believe me. There's a lot of stuff going on in New York, okay? Which I know. The markets will drop 1,000 points and rally like you've never seen a rally. I'm telling you right now. Because if they indict Trump and he is forced to basically concede that he's going to move from the office, and there's actual charges and stuff, who's going to be the next president? Quick, guys. You guys are Americans, right? Or even a non-American knows that. Who's going to be the next president?
Pence.
What?
Pence is going to be the next president.
Excuse me? I can't hear you. That's why I'm asking you. Your mic's...
Oh, I'm sorry. Pence will be the next president.
Thank you. And all of you should answer that. Everyone's thinking like, oh my God, who's going to be the next president? Come on, guys. Thank you. Mike Pence. And Mike Pence is a very rational guy. And the markets are going to love it because all the policies are going to remain the same. And the markets are going to rally 2,000 points. And look, I love Donald. He's my neighbor. And trust me, that the CFO was given immunity. I actually met that gentleman a few times. I think I mentioned that to you guys. Back in the early 2000s when they were raising money for the Atlantic City casinos, which I've mentioned on my other webinars. All my investors lost 80% of their money. I got sued a couple of times. I had no fault. I just said, go talk to Donald. That's serious. It was the worst ever private offering. Our firm raised, I think we raised about $70 million. And that was a small chunk of the overall raising. And all my institutional guys and stuff, they literally lost it all. Not funny when I think about it. So, but he's the master of the game, right? Good old Trump. But that's the way.
The other thing is Twitter will go down 50%.
What will go down 50%?
Twitter will.
Twitter's going to, yeah, okay, I know what you're saying, okay? But no, it won't go down 50% because Twitter's real money-making traffic doesn't come from Trump tweets, okay? It's doing a lot of other stuff. But yeah, I get the joke, yeah. So anyway, so the bottom line is that's the story, right? So can this type of stuff happen? Absolutely. Absolutely. All right? Absolutely. And if we drop from where we are right now, this bull flag that I predicted like was going to happen. This is not a bull flag. It's a cup and handle breakout. You can see that. I even drew the cup. Breakout with a maximum move around, around 2897, 2900. You can see that. I mean, if we want to be very exact, what's this channel here? Right there, 2887. I've mentioned all this stuff on my post. 2888, which is roughly about 15 points from here, or 13 points from here. So 13 points on the S&P is multiplied by 6, roughly another 100 points on the Dow, and we are reaching, we are basically attempting to enter channel number 2. Remember, this is channel number 1. Let me clean this out. This is channel number 1. I hope everyone understands this. This is 2. This is 3. This is 4. This is 5. Okay? So every time that you hit these channels and you try to re-enter it, it acts as a resistance. Period. So this move from here to here is 100 points on the Dow. Given what I see, we're going to hit that this week. This week, 100 points on the Dow. Because with futures up 6, that means the Dow is going to be up, what, like about 42 to 50, futures. Dow futures are right now up. I thought I had the Dow futures here on my thing. Does anyone have that on their toss? Where is my YM? How idiotic is this? Let me just put that in. Dow futures are right now up. Does anyone have their systems open? The futures for Dow are YM. And why am I not seeing it? Does anyone have their systems open? I'm asking a question, please. Does anyone have their systems open? I mean, I already got mine, but does anyone have their systems open?
Yep, I've got it. 25,871.
That's not what I asked you. How much are Dow futures up right now?
Oh, 79.
There you go. Thank you very much. So Dow futures are up about 80 points. Futures are up about 6. So futures wise, basically it's conversion is, you don't need to do a conversion. Just look at your frigging, iPhone, and your system like Dave did. DC Traded did. So bottom line is that's the story. So we got 100 points in the Dow. And if I do my measurement, we can go up a little bit more than that. This is where we are. So cutting back to it, this is what's going on. Now, every time you have a cup, you will always get a consolidation pullback. You got a big cup move here, and you got a consolidation that lasted for how many days? This is May. The consolidation started at around the middle of the month. Remember, always in the middle of the month, we get nice reset. We got this year too. I mean, this month too. And then it lasts 1, 2, and it keeps on going. It goes up. That's what creates a channel. Comes down, and it normally lasts anywhere from a week to 10 days. Okay? Sometimes shorter. Sometimes it lasts 2 days. You got a cup, you got a pullback. Up, pullback. Cup. I actually forgot to draw this one. Cup, pullback. Okay? Cups always have a handle. And I explain to you why. We tend to buy around these levels. We tend to take profits and ease out, and then the consolidation happens. This is, as I said from my first basic intro session to my students. It's on the YouTube channel. You can listen to it under the new member introductory videos. Look for a date, which is the earliest sessions. And I always say, this is where almost retail traders get completely messed up in their head. Because this is the hard one to read. Whether it's a bull flag and a consolidation, whether it's a cup or a consolidation, which in simple English means profit taking, okay? And it zigzags up and down. You don't know, given the volatility in the market, and that's why I'm constantly posting my signals, whether it's going to break out or whether it's going to break down. If it breaks down, it creates a W pattern of major support levels. That W pattern, again, is a screaming buy, and big money's made. W's make big money. Double bottom moves. So this is where the trick comes in. Trick meaning there's no exact way of telling. And that's why as pure tactical traders, we look to see reactions of markets at certain major inflection levels. Instead of sitting there saying, oh, it's definitely going to happen. There is no definites. So when I hear those type of terms in the chat room, I normally tend to correct those people so that they can curb their enthusiasm, as the TV show goes. All right? So at this point, cup, handle, breakout. The breakout is going to hit at least 100 points higher and possibly overshoot. One quick thing, which I've always said, never short in any meaningful way other than intraday shorts, quick scalps on SPY puts or SPX puts or IWM puts, things like that, or even the Qs. Never go dramatically short pre-Labor Day weekend. Simple. It's one of the biggest shopping days of the year. And I've said that for every major holiday. You're not going to have, in general, you don't have monster bear market type of crashes, major crashes, which will decimate the hopes and dreams of happy Labor Day weekenders, good old people, our U.S. consumers, and then the shops stay empty because everyone's like, I'm not going to spend on that discounted TV that I want to buy. And the next thing you know, it has a ripple effect, a multiplier effect on the U.S. economy. Consumer spending goes down, and everything goes to hell in a handbasket. Okay? This is actually pretty simple. It's called the Clueless Trading Almanac. How do you like that? All right? Don't short Thanksgiving, pre-Thanksgiving. I mean, in a big way. Don't do that with Labor Day weekend, certainly, especially in such a beautiful summer. That's it. So at this point, 100 points here. That's going to be by tomorrow morning. World futures are up 80 and it overshoot. So on a short-term basis, by Tuesday, we should be technically overbought on the hourly charts, which are the traders chart right there. We're already technically overbought, but the difference is this is the hourly chart. That's why we're big fat red arrow. By the way, just anyone who doesn't understand this, a big fat red arrow means that you're going to see a lot of selling pressure there, okay? Because I do get asked questions in the middle of the day on the PM message. What does that exactly mean? It means a frigging big fat red arrow. That means that you're going to want to be majorly non-exposed on the long side. In other words, you want to sell all your tactical profits and maybe go into cash in a large way. That's what a big fat red arrow means. Somebody did ask me. It's like, whoa. And what is a big, reasonably large blue arrow means? You buy there. Okay? And this also affects on our trading stocks on that side. Not all of them. Some trading stocks don't give a hoot. They go their own merry way. Now we have retail earnings season. Very excited for next week. We have Best Buy. We have Ulta Beauty. We have a bunch of them, right? Big names. Retail has done great for us on earnings. I don't need to repeat that. Whether it be Williams-Sonoma, whether it be this or Kohl's, whether it be Target, whether it be Walmart. We made a killing on those earnings baskets. So retail earnings, Best Buy, in my opinion, we'll take it. No, I don't know if I have time, but I'll take a look at the chart. At least post it tomorrow. I think it's going to go nuts. It's already going nuts. Does anyone ever seen Best Buy's chart? What's 77, JP? Oh, you mean Dow Jones futures? I don't know. That's why I get a headset. I don't want to look at this dialog box and people just typing in things. This is too much for me, all right? Just freaking get a headset, JP. And next time anyone doesn't have a headset, I'll just throw them out. No, seriously. So bottom line is that at this point, this is your hourly chart. So if you're trading SPX or SPYs, which a lot of traders do, and some of our traders trade E-mini futures, and this is the 1 hour E-mini. You are looking at this channel that I had drawn way back, all the way from the first week of August. This one, this blue line, and the upper end of that channel is 2890. Matches exactly what I showed you on the daily. Like we're going to about 2900. 2900. Then we're going to pull back and then we're going to blow through 3000. Trust me, that's exactly what's going to happen. We're going to 3000, I'm telling you right now. It's a round number. Market wants to get there. Algos are emotional too, They like round numbers. 3000 feels great than 2900. Like, what's another $100? Come on. Just do it. Just get it done. So that's it. This is your active traders chart, the 15-minute. It's absolutely perfectly drawn to people who are trading E-minis, people who are trading SPX or SPY, or at least in my case, I trade both the SPX and the SPY. But more importantly, this gives me an idea of what the markets are doing during the day, so I can guide all my members in a very timely and actionable way. Because if I'm starting to see sharp, quick breakdowns, and we are in the middle of a Google trade that's up $15, and I'm starting to see this coming down, I'm basically going out there and say, hey, sell those right now, even though I'm trading Google off Google's own chart. But this is important. So when some of you are not looking at the 15-minute, when I'm posting it almost every hour, and not understanding these levels, which I don't know how somebody cannot understand it, to be honest with you. Here's a channel, and then here's the breakout, and then the upper end of the channel again is 2896. All arrows pointing towards 2900. This is where we are right now. This was a big sell-off. Came suddenly. It was supposed to be a consolidation channel. Instead, it just completely broke down. That was last Wednesday. And it was a gift. And I said that too. It was a gift. Because on multiple fronts, not on the 15 minutes necessarily, the stochastics and other internal indicators, including the McClellan oscillator, was down minus 250. You see a McClellan oscillator minus 250, you want to go out there and buy stuff big. Well, not even big, but get in there. And I showed those charts. So that's where we are, guys. No over explanations, straight. Now I will. I'll go ahead and so the most important key to this week. Let's take a quick look at it. Let me pull it up. Is I'm pulling up the calendar. Bear with me 1 second. Weekly, and here it is, ladies and gentlemen. 1 second. And this is important because this is how the markets are going to move. We should, technically speaking, hit a high by Tuesday, have Red Wednesday, which we have almost every Wednesday. It could be moderately ugly to really ugly. So you want to take down some very decent profits, not necessarily on the long-term swings, but, short-term fat profits. Don't get excited. Don't get excited when you make a lot of money, and certainly don't get excited when you lose a lot of money. And look, this is the way it goes. Tactical traders don't permanently lose money. That's serious. Because what you lost money on went exactly to where I said it's going to go, unless it's a full scale breakdown. But the stocks that we have on our list that we trade don't have bear market breakdowns. They fall. You sell. You don't look at it again to re-enter, and it just zooms up to where I said it's going to go. You never dollar cost average, buying an option at 6 and then buying it again at 3, and then you see it go to 15. So point the gun to your head, not to the market. Well, that's a little bit hard. Point a water pistol to your head. How about that, all right? Not at the market, not at my charts. Okay? I should never use the word like, oh, you completely lose. Yeah, certain stocks, boom, and they don't come back. I can't even, I don't actually remember one, because everything that we trade, generally, volatility, they come down, cost average, or we buy those lows, and they go higher. Facts, guys. I'm an optimistically realistic guy, not a pessimistically realistic guy. Okay? So, for all the pessimists in the group, you guys are not realists. You are basically dumb because you're leaving huge sums of money that I have delivered on my tactical charts, and you make excuses. You're not a realist. I mean, you're certainly not an optimist, and never will an optimist say, a pessimist say, oh, I'm a real optimist. Nope. Okay, let's move on from this optimist realistic crap. So where are we now? Thursday, January 5th. So we are moving. I'm losing track of days here, guys. 27. What are we? Oh, why am I in November? What is this? June, July, August. Perfect. 27. Why isn't it giving me more? Okay. I told you I was dumb. I can't read calendars. So these are the dates. Monday, tomorrow starts off, ladies and gentlemen, okay? We got the Chicago Fed National Activity Index. Yeah, it's important. Not unless it really drops off like big time, then it's fine. 4 big bill announcement, who cares? 3 bill auction, yeah, it's okay. 6-month bill auction, somewhat important. 2-year note auction, very important. Because that measures the demand of short-term money, whether they are buying into it or not. So Rick Santelli comes in, listen to it. It's not a market breaker, you have a little dip here and there if it's really off the rocks. And no one wants to buy our short-term paper, which ain't happening. Everybody wants to buy U.S. government paper, all right? You know why? Because the U.S. dollar is king. That's serious. Yes, we want slightly weaker dollar, but the dollar rules. All right. International trade in goods, yeah, somewhat important. Retail inventory is very important. Wholesale inventory is important. Red Book, that's a retail sales number, important. Because we want to know how the U.S. consumer is spending. Case-Shiller, housing index, Dr. Schiller. He's getting a little redundant. Now, if the housing index really, Case-Shiller index really falls apart, then market has a short-term impact. Not a bear market type of trend change type of thing, but it's important. And Dr. Schiller has been dead wrong on the stock market for so long, I don't even know. He's got a great Schiller index. He's got the index. He's making money. What the hell does he care, right? Consumer confidence, big time important. We want the consumer confidence number to be strong. If it falls apart, you can expect the market to drop 100 to 200 points. That's at 10 a.m. Tuesday. Okay, consumer confidence, very important. 80% of the U.S. economy runs on consumer spending. Richmond Fed Manufacturing Index at 10 a.m. It's important. State Street Investor Confidence importance. Who cares? Honestly. So it's there, but no one cares. Anyway, what's really important on Wednesday is the GDP, the gross domestic product. How's the U.S. doing with producing the total aggregate sum of goods? That's important. Our GDP needs to be somewhere in the high 2s and hopefully 3+. Remember one thing, regardless of what my boy Donald says, the U.S. ain't growing at 4% a year. Can tell me, or will not grow 4 to 5% a year. Can somebody tell me why? Let's see how smart some of you guys are. Please. Why cannot the U.S. economy, the U.S. economy can be supercharged. We're in a great economy. Okay? And but why is it difficult for the U.S. economy to grow at a 4 to 5% rate, as he likes to say in many of his speeches? That's all political jargon. Anyway, why? David? What do you think? David? Can you answer? I'm calling by names as I see on the list. Can you tell me why it's difficult for the U.S. economy to grow 4 to 5% annually? Are we going through the silent period? David, you won't answer, so I'm going to move on. DC Trader. Why is it difficult for the U.S. economy to grow 4 to 5%? And this directly relates to our trading, trust me.
Yeah, I'd say it's a law of big numbers. We're just too big an economy.
Okay. JB, what's your thought? You're a smart lawyer. JB, please respond. JB, you still there or you got drunk? Okay, waste of our time. Lisa, what do you think? Why is it difficult for the U.S. economy to grow at a sustainable pace of 4 plus to 5%? Okay, Lisa refuses to answer too. Great. And Milan, TSARM, why do you think it's I'm asking the question like again, why is it difficult for the US economy to grow north of 4%?
Yeah, I think it's because the consumer, which is about 80% of the economy, is pretty much spent. So there's not a whole lot consumer contribute to the growth.
Do you really think they're pretty much spent? I don't think so. Do you really think they're pretty much spent? Do you see that around you? That people don't have money? People have always money. Their credits, their credit's good, they always have money. That's not an answer. That's actually a pessimistic answer. But at least you answered. Who's that, Milan?
Yep, you got it.
Okay, good. At least thank you for answering. Lisa, will you respond? And JB's drunk. Okay, good. So the answer is, my good friend DC Trader. It's called the law of large numbers. Okay? And why is it the law of large numbers? We are what's our GDP right now? Like 19 trillion? Let me look it up. GDP US 2018. Our GDP right now is, because in the second quarter, as recently as July 27th, we grew at 4.1%. That's the best pace in nearly 4 years. Obviously, we got tax cuts, we got business-friendly policies, people have more money in their pocket, and it's big. And I'm looking for the number, which is an exact number of how big our GDP is. How many trillions is it? US GDP. Total. Okay. Our GDP is right now, wow, 2018. Well, I was close. $20 trillion. $20 trillion, all right? Guess what China's GDP is? And it's obviously growing at 6+% a year, lower from the 9% it was growing at. Our GDP in 2017, I was right, amounted to around $19.3 trillion. Guess what China's GDP is? Thank you, DC, for that answer. Common sense, guys. What's China's GDP? Take a guess. It's the fastest growing, one of the fastest growing economy, not the fastest growing. Fastest growing economy in the world, I believe, is Cambodia or Vietnam or one of the other third world countries, obviously, because they're coming off from a low base. So China's growing at about 6% plus. What is their GDP? The US GDP is, I'm rounding it off, 20 trillion. What's China's GDP? Take a guess. JD's attempting to answer, but he's on the floor drunk, so he can't really get up right now. When you do get up, JB, just let us know what your answers are. You can write down on a piece of paper. Okay, what's China's GDP?
I'll take a guess and say 4.
Nah, that's too extreme, man. What do you think? Subsistence? No, that's pretty dramatic. I like that answer. No, it's around 10. So it's half hours. They're growing pretty fast, guys. Don't forget, they got the quarter of the world's population, right? So their GDPs and their internal domestic spending has gone up a lot. So they're growing. They're at 10.43 as of 2/9. I thought it was like around. I personally thought it was around 8. So So 10.5 billion. So law of large numbers. The bigger, if Google's Amazon at $2,000, let's say, okay, which it gravitates to almost every week, for it to move 10%, that means it has to move. This you'll understand. You'll have to move $200. Okay, $200 in a day. Amazon. A stock, which is $200, which a lot of the stocks that we play, like a Spotify, or a Netflix, which is 300 and change, growing 10%. I mean, not growing, jumping 10%, which it does, which it did. is $20. Correct? Everyone understanding this basic simple math? For traders, it's very important. A $20 stock jumping 10%, which we play a lot of these earnings, and they double and triple the next morning. Those earning baskets are beautiful. So 10% is $2. A $2 stock jumping 10%, nobody even bothers, is 20 cents. Correct? So for this to happen, law of large numbers, takes a lot of push, a lot of money to push a $2,000 stock up 10%. A lot of money. Same thing with the U.S. economy. To make it grow 4 to 5%, a lot has to happen. Domestic income has to keep on rising. Domestic consumption has to keep on rising. Domestic exports overseas has to keep on going higher. All kinds of stuff that are the inputs into the gross domestic product has to happen. For China, it's a $5 trillion economy. They can grow at 6% on a sustainable basis, despite all the trade war and all this garbage. Okay? It's the same thing with the stock. A $2,000 stock has a difficult time going up 10% to 200. Yes, it does on earnings here and there, but it takes a lot of money. A $200 stock can quite easily go up 10%, which is 20 bucks. Happens a lot in our universe of clueless aid trading. A $20 stock going up 10% happens a lot. Very easy to do. We see it almost every day on the retail stocks. A $2 stocks, which we don't normally play, 10%, 20 cents, well, blah. That's it. All right, guys? So you got this GDP number, very important on Wednesday. If GDP comes in a little bit softer, which I think it will, the markets will drop. That's why we call it Consolidation Day, called Red Wednesday. Now, if GDP slows down a little bit, it takes the pressure of the Federal Reserve, from going gangbusters on rate hikes. That's one of the reasons why the market rallied, because Chairman Powell was moderate in his statements. He's a great guy. He doesn't give a crap if Donald Trump and Donald and anyone else in the administration, which no one else will, keep on pressuring him to keep rates low. He'll do what is needed, which is great for the U.S. economy. You didn't need runaway inflation and not raising rates. Then you just fall off the cliff. He's going to do what he does. He's a great guy. And he said we're going to have gradual rate hikes. So a slightly lower GDP is going to be very helpful. But initially, the markets will drop. Like, oh my God, we're slowing down. As long as we grow north of 2+% with moderate inflation, corporate profits going higher, we're good to go. That's it. So this is an important number. Corporate profits, important, not that important. Corporate profits are strong. We already know that. This is very important. Jobless claims, most important is personal income and outlays, because it's directly tied in. By the way, just so you guys understand why we're talking about this, because all these things directly affect your trading on a daily and weekly basis. And I'm giving you a little background. That's what we do at Clueless Aid Trading on macroeconomics, which some of you might have taken, done very well. Some of you took in high school and college, never understood it, crapped out of it, cheated from somebody else. And most Americans are basically dumb as a doornail when it comes to macroeconomics. That's serious. And you know I have complained about that before. You say GDP, go ask you, we're walking around the street, hey, what's the GDP? They think it's some sort of new drug. Okay? Like, what happened? Mets gone. Now we have GDP. Like, okay, money. But seriously, try that out there. When you're out there at a bar or something, they'll be like, wow, what's that? So anyway, personal income and outlay directly tied in with GDP and consumer confidence, right? So these things are very tied together. Okay, and then everyone's going to be like, you know what, Nava Trading, I did really well. This Clueless Aid guy is really helping us do things. Some of you will complain. Who cares? I don't listen to complainers. I don't listen to anybody anyway. So bottom line is that It'll be like winding down. It's Friday, Labor Day weekend, weather's nice. Chicago PMI. Chicago PMI is important, and it's important because it is measuring the cost of raw materials, right? Not CPI. CPI is consumer price inflation, the price of average goods that we buy. The PMI is basically, I'm sorry, that's the PPI. This is the Chicago PMI manufacturing index. My apology. Chicago, manufacturing index. So that has to be reasonably strong. We don't want manufacturing to fall off the thing. And then consumer sentiment, similar to consumer confidence. So these things will play upon on Friday. Here's my take. We're going to end August on a pretty strong note, in my opinion. September is going to be very choppy in the middle. First part of September, there's going to be some money flows, new money flows into the market, and markets will attempt to basically go over or try to kiss 3,000 on the S&P 500. Our stocks will hit the upper end of the range. We will get severely overbought, and we might get up to 28.97. We might even get to the upper end of this channel. I doubt it, but what the heck do I know? In the 2,900 range, which is well, we're almost 2,900 range. We could get to 2,980, which, if you look at my chart, is the upper end of this this channel, the magenta channel. Okay. Eventually, by the end of the year, if things go not end of the year, end of the year, we could be at 3,100, and that will complete the wave 5 theory. And we will have a pretty serious stop in the market. After that, we should go into a mini, we should get into a mini free fall, but the free fall is never straight down, as you know. We will have interim rallies along the way, but overall, the market trend might change from there. So that's my long-term forecast and stuff. So we have a lot of good opportunities to make money now, and this is something I want to tell all of you guys. Market gives us windows of opportunity, right? And we need to take that into account. So I'll answer a couple of quick questions, and then we'll wrap up. So any questions from anybody? I'll certainly answer. Any stocks that we want to look at and things like that. A lot of my stocks are built in here. DC, if you have any particular stocks you want to look at, let's take a look at Netflix while I'm waiting. Netflix has a lot of room to go. And when I say a lot of room, it's not like I think, oh my God, it's going to make a new high. I'm just looking at the gap. The gap is where it finds a major resistance. That's at 380, and I believe that's around the corner. And that completes this pattern right there, which I called. Okay, so a little pullback here maybe, pulses up. This is a big gap, big resistance, and God help us if it breaks above the gap, it's going to make a new high at 444. Believe me, it will. If it breaks above the gap, it's going to attack 425 along the way. So we know how we're trading this thing here. So very powerful. I like stocks which are not close to highs or all-time highs, because then I can see what those, what the upside is. And sometimes when they break out to new highs, they keep on running. That's fine too, but I'd rather be buying it here like I did and recommend it to all of you and stick with the swing trade based on my charts. Lisa, you have anything you want me to look at? Can you guys hear me? Are we disconnected?
Hey, this is Walter. What are you thinking about Boeing for the next couple of days?
Which one, sir?
Boeing.
Oh, Boeing. Yeah, Boeing chart looks pretty damn good. Keep in mind that Boeing is very sensitive to the trade talk, right? There's something big going on, which is the fact that we are on, well, that's what I hear. And I posted that we're on the cusp, Walter, of the NAFTA deal with Mexico, and right after that, Canada falls in line. So if the NAFTA deal does get done and we don't have any last minute hiccups, Boeing is going to basically hit the upper end of the range, which is 360, 364. Boeing tends to move very rapidly on any type of positive movement on trade talks. Boeing is also quite sensitive, believe it or not, to commodity prices for some weird reason. Okay, and so the point is that yeah, exactly, because it's industrial, right? So Boeing. So if you have a strong dollar, too strong a dollar, but the dollar is starting to ease right now, then Boeing gets hit. So as long as you have a slightly moderate weak dollar, keep an eye on that. Boeing is going to be completely fine. And the reason behind that is that Boeing is export driven completely, right? And their biggest customers are the Chinese and the Middle Easterners. So given where we see right now, we are in a bull flag consolidation pattern. And in my opinion, as long as Boeing stays above the 345 level or so, as you can see from the charts, we are going to break out. Boeing is a good, strong power mover. However, keep in mind that being an industrial, it will be left on a certain day for no reason down $2 or $3, primarily because of the currency fluctuations, i.e. stronger dollar, not good for Boeing, slightly weaker dollar, good for Boeing, and news flow coming out of the trade tariffs, the trade war with China and stuff. So Boeing looks good. Like technically, if we knew there's no news, this is very good, and this. And max move on Boeing 364. This was where the big sellers come in. And if we do break that, Boeing's going to make 375, which means the Dow is going to hit, the S&P 500 hits those higher levels of around 2,900. So S&P 2,900 here would be Boeing, because Boeing is a major component of the SPX and the Dow, right? So SPX 2,900 means that Boeing is heading towards as long as it breaks about 360, we are going towards the 2,900. It's a good solid bet. Boeing has, honestly speaking, it's one of the best stocks. It's not as sexy as like a Netflix going nuts, right? But it's really good. So is John Deere. John Deere isn't perfect. John Deere, perfect. I mean, my John Deere chart, you buy those calls at like 60 cents, 70 cents, $1.50, not breaking the bank to buy those things, like some of the tech stocks, and the stock goes up 50, 60, 70, 80, 200%. 530% on the August 24, 142 calls. I would be happy to say that I owned a lot of that. I didn't. I owned a little bit of the 142s. I do own a nice amount of like I recommended, the August 31st, 142 calls on John Deere. And those were up 130% on Friday. So those are the things you want to be in if you don't want constant headaches on crazy volatility. You understand? So that's a very good question, DC. 1 second. Let me pull up John Deere. I love John Deere. There's so much going on with that company. It truly is a great American company. So here's John Deere. And you know why else I like it? You probably know the answer, DC. Why do I like John Deere so much? From the chart pattern standpoint. It's a very simple answer. Go ahead and tell me.
Well, if it's going to go back up to the highs that it did have,
so the simple answer is it's got a lot of upside. It's got a lot of upside. And the other thing that drives me wild about this stock is the options are so cheap. One of my biggest trades this year was buying a large amount of John Deere options on the initial move from this level. I think it was back then in May when we first played it. Because I'm not a John Deere trader. So I'm like, wow. It was like 1,800%. I mean, I looked at my P&L. I'm like, is that real? Just this move alone. These are nice moves. This move alone is good for 400% on your money. Can't beat that. So yes, and I like the fact that it's got multiple bottoms. I know where the floor is. The floor is 134, 131, 130. It's nice to know where the floor is. Now, I don't want to go to 130 when I'm long. That means, I'm like down big. But this is great. I can trade. This is your trading range, 135 to 147. Let me clean this chart out and show this. This is a very sexy trade for tactical traders. Not because it moves like a monster. No. It gives you the stability, which we all like to see in our money, and it's a great company, and it can really fly as long as we don't, even when things are like, if any sort of slightly good news on the trade front with Mexico, with Canada, and of course with China. The good news with the China trade talk is it's not flaring up, right? They talk, they didn't agree. Yeah, we kind of knew about it, but they're not like calling each other names like, good old Donald's not at 4 a.m, cursing in Chinese. Ivanka Trump speaks Chinese too, her daughter. So they're cursing in Chinese, right? No. The G is not going nuts on him. They're being civil. They're being adults. The difference is they'll get around it. Believe me, they will. And we need them, and they need us a lot more. So that's it. So John Deere, ooh, tractors, soybeans, they raised their prices. I mean, what more could he ask for? Just on earnings, it was a huge winner. It was our biggest trade of the month on the reversal, the 14-point reversal, and it looks great. So it looks really great. So this is your range, 135, 147. Once it hits here, it's going to pull back a little bit, maybe. But remember, after the third attempt, from what I've seen, it'll break out. And that breakout takes us to 150. If you buy a call at $1.50, you'll be selling them at $6, $7. Isn't that sweet? So on that note, guys, given that other people are listening and no questions, let me run. It's 11 o'clock. I do wish you well, all of you. And more importantly, I'm simply excited that all of you guys came in this late, especially East Coast people. Listen, we're going to have a great week. Just purely try to be as less emotional as possible. When I say these things, I'm not just, it's not like some sort of like slogan. I really, truly myself control my emotions as much as possible. And I also fail on it sometimes because I am not fully a robot yet. The day I become a real complete robot in trading, I'm going to give myself a little WD-40 to drink. How about that? All right? Instead of my other drinks. So I wish you guys all well. This is absolutely a very, let's put it this way. This is a stock market. It's acting like a stock market. It's good to know that things go higher. But things are not going to go higher every day. The general trend is higher, as we know. And I'm going to try to pull up the final chart on the S&P. Okay, let's make this bigger. This is where we are right now. This I wanted to show. This is obviously much more precise. Right here is the rising wedge. That rising wedge, again, 28.90. 28.90. Screaming, right there. See that? That's a rising wedge. Now, what happens when you get to a rising wedge? Let me change the color. All pattern. It gets up here. Ooh. Put this. There's your rising wedge. Okay? Everyone see that? So it gets up here. Oh, come on. It gets up here and boom, it creates a consolidation channel. That consolidation channel could drop us all the way down to 2850 from 2900. That's 40 points. That's 280 Dow points. Boeing and all those stocks will be down big time. We have had so many consolidation channels. Look at that. This was big. We don't want those unless we're prepared, right? So leaving those aside, recently, this is your floor, 2800, 2900, very simple. 100-point moves, that's what the S&P normally does. 100-point moves. And once we get up there, I want to ease back at things. And of course, I'll be updating you guys. So everyone, please keep on following the charts. It doesn't really matter that you sat around, missed out on, many of you did, missed out on not making the money you deserve to make by following what I delivered to you guys. No big deal. Doesn't matter what happened in the past. Let the baggage be. Let's move forward. Let's move forward. I keep on telling myself that. Okay? So let's not live with the baggage. Let's not be too much of a pessimist who thinks he's a realist. Okay? Let's try to be overall bullish because that's what's happening. And more importantly, let's not get too happy when things are going up fast, and let's not get too depressed when things are not going and we are caught in a trade. This is your chart. 1 second. It's very important. All the technicals here, quick glance, are cooperating. I think, they're all moving up nicely. They're going to move sideways a little bit. Once you start to reach those upper levels, that's when you get overbought and you start curving down. Nothing too difficult about that to understand. And there we are. This is the upper level, 28.90. Can it overshoot? Believe me, it can. And it has happened before a couple of times. That overshoot is dangerous. That's when the final dogmatic shorts go to die. Literally, they are shot. It's like a genocide, okay? Without getting too dramatic. And that is the time you want to place some big shorts. I hope you guys understand what I'm talking about, because that squeeze, just the way there's a short squeeze, this is what they let the longs out to, boom, and everyone just leaves town and the markets go higher. Same thing, shorts all leave town, most of them, because it's a mathematical game, and they're just like, oh my god, can't take the pain anymore, because shorts basically also short the market heavy on margin, right? So they can't handle it. Margin sellers for institutional margin sellouts on their short trades that are going wrong, and boom, they're out of town, and then the market pulls back. It's a game that's played over and over again. Is it easy? Absolutely not. And final thing I'll tell everyone, real simple. If trading and making real money on a consistent basis like we do was easy, every single bozo out there would be a star trader. Nope, doesn't work like that. Real money that we make on swing trades, intraday trades, big time nice fat calls when nobody's looking at the markets or individual stock, buying off the 34-day moving average, buying off the 20-day moving average. This is what we do at Clueless Day Trading. If it was that easy, then everybody would be a star trader. It doesn't work like that. Repeating myself, all right? God bless you all. Thank you for listening.